For the market to finish in the end, closing down 1.3% and broad-based losses.
It wasn't a pretty day on the market, and as you mentioned, James, the selling was across the board. If I bring up the market map, you'll notice that anything that lost ground today is in red, and it was pretty much red across the board. There were a couple of bright spots. One was the telecom sector, and that was mainly Telstra doing the heavy lifting there. But also some of the Australian dollar-related stocks also seeing an increase. With the Aussie dollar falling, it's been good news for stocks like Brambles and News Corp, and these stocks saw a gain. But if we have a look at the intraday graph for the Australian share market, this is what it looks like. So you can see that we closed near the lows of the session once again. In fact, if we have a look at the top 20 blue chips on the Australian share market, we only saw 2 of them gaining ground today, Brambles and Telstra. And even in the top 50, we only saw 5 gaining ground. And the extra ones there were Fortescue, News Corp, as well as Iluka shares. Part of the reason we were sold off so much is not only the GDP numbers, but the fact that we also saw the Japanese market being sold down. In fact, the Japanese market's down by 3.4% at the moment. So that's adding to jitters around the region. One stock that was in focus was Virgin, 5.1% a stake going through before 1:30 p.m. So a bit of speculation that one of its strategic partners may be increasing its stakes. But all in all, it was a pretty painful day on the market, down 1.3% with $4.5 billion being traded.
The jitters being created out of Japan's market, is it bleeding into our market? Is it unsettling, do you think, investors here?
I think it is unsettling investors, and if we have a look at the Australian share market, well, we did see our market falling down further in line together with the Japanese market fall. So the fact that we are seeing that extra volatility around the region certainly has investors around the region spooked out. I think the other big impact on the Aussie market, though, is the Aussie dollar. We've seen the Aussie dollar now falling 6% over the last month, so it's been a pretty steep fall, and today we saw the Aussie dollar taking another fall. In fact, if we have a look at the Aussie dollar and how it traded throughout the day, this is what it looks like. You can see that just in the last hour we've seen a slide in that Aussie dollar, and that's a sign of risk. The risk tolerance levels are out there, and I guess investors are becoming a little bit more scared with some of the news coming out of Japan. We've already seen physical moves, we've already seen monetary moves, and I guess the hopes were that we would see some structural reforms coming through today, but unfortunately the market not seeing that coming through, and it's led to volatility in the currency markets, which has a flow-on effect to the equity markets. Because for Australian investors invested overseas, it's great, but the problem is overseas investors invested in Australia, they feel the pain, and with the Aussie dollar forecast to fall further, and most brokerage houses having the Australian market underweight in the global portfolio, unfortunately it's been bad news for our market.
Julia, I was looking at the technicals today. The last 3 weeks have done a lot of damage to our market in terms of the technical picture. I see a target somewhere around the 200-day moving average, around 4,735. There's a Fibonacci number from the 2012 to 2013 high, around 4,765. But really not much in between those levels, and the trend has certainly gone from quite mightily up to into a downtrend on the dailies anyway.
Absolutely. And I guess just putting it into perspective, the Australian market had been up 25% over the last 52 weeks with very few corrections in between. So if we were to see a correction of around about 10%, I think most investors would be quite comfortable with that. As you mentioned, John, though, if we do see a break below that 200-day moving average, which is at about 4,715 points at the moment, that's when there's going to be fears that perhaps we have seen this big run-up that we've seen throughout the last year coming to an end, and maybe it's rather a reversal of a trend rather than a correction. But at the moment, it looks like a correction. We're down around about 5% over the past month. We are watching that 200-day moving average as a floor to this correction, and unfortunately, if we see a break below that, then that's going to have negative implications, and we'll probably see some technical selling coming through.